This simple scalping strategy will make you thousands of dollars if you watch this video to the end. So many people end up blowing their accounts because they try to scalp wrongly. They try to scalp with their intuition. They try to scalp with multiple strategies. They try to scalp without a well-defined trading plan. And this is why they end up blowing several accounts. If this is you, don't worry. This video will be the solution, the only solution that you need. All right. So without further ado, let's dive into it. Now, what is scalping? Scalping is a type of the trading strategy that traders takes multiple positions in a day, right? Open multiple positions in a day. Now, as a scalper, the number one thing you want to actually do is to understand the structure, right? The first thing is to understand market structure before you do anything else, right? Now, this is US 100, right? If you look at this structure, you agree with me that this is a bullish movement, right? Where we have higher highs and higher lows, right? So this is a bullish movement. Now, having identified what the trend is, the next thing you want to focus on is what the market is doing right now. Now, if you observe closely, you're going to see that this was our last higher high, right? This was our last higher high. And also the lower high that was, sorry, the higher low that was responsible for this higher high, price has taken it out, right? So a lot of people are going to say, okay, this is a change of character, price has changed direction, and they're going to be looking for more sales, right? But the thing, some of my students watching this video right now, you already know what this means, right? You already know the ABC strategy, right? So this is price just taking out liquidities. But that is not what we are talking about here, right? We are just trying to identify our zones. This is what price is doing right now. Price has just taken lots of liquidities. Price has cleared, two higher lows that was responsible for higher highs, right? Now, so what are we going to do in this scenario? We'll mark out our key zone, right? This is our key zone, right? This is our key zone. Why are we marking out this key zone? Because this is a demand zone that was responsible for this break, right? This is our liquidity zone now, right? Price broke out. Price gave us a new higher high here from this demand zone, leaving imbalance behind, right? So this is a very, very strong demand zone. You can see the movement of price after this demand zone was formed, right? So we expect price that regardless of how many higher highs or sorry, how many higher lows price has taken prior to this demand zone, we expect some form of reaction from price, right, from this zone, right? So, and remember, we are scalpers. We don't want to know what price is going to eventually do later in the day, right? We just want to get the reaction that price will give on this daily time frame, right? So this is our daily time frame. Now we understand what price is doing. So what are we going to do? We're going to go to our execution time frame, right? So our entry time frame for scalping is 5 minutes and 1 minute, right? You can use 5 minutes or 1 minute, right? But personally, I use the 1 minute, right? So I'm going to, guys, my trading view is not subscribed. I was supposed to subscribe it, but I don't know what came up, but we are just going to do it manually today. We're going to pick our trades manually today. So just bear with me, guys. Now, so this is our daily POI. This is the POI we marked on our daily time frame, right? Now, so when price gets our POI, we don't do nothing. We just wait for a change of character, right? Now, look at what happened here. This was the last lower high that was responsible for this lower low. Price took it out. Price took it out to give us a change of character. So when this happens, we say this is a change of character. Then we look for the valid demand zone that was responsible for this. Remember, if you haven't watched my video, the video I made on demand and supply, I'll leave the link in the comment section, right? Just to help you understand it. Now, this is a valid demand zone. Why? Because we have a tiny imbalance here, and also we have this push here as well, right? Although this imbalance has been filled, but we have a tiny imbalance here from here to here, right? So we're going to mark this zone as our demand zone, and we're going to cover this low, right? Now, look at what price did. When price came to this zone, price pushed to the upside, right? Price pushed to the upside. And this would have been our first trade here. And then we'll target this high here as our take profit. Or since price is reacting from a daily demand zone, you can decide to target all of these highs, right? Depending on your greed level, right? But let's just keep it at this high first, right? Now look at what price did here as well. Price moved from this zone and took out this high as well. It took out this high and it gave us a valid demand zone as well, right? Look at what price. Now, this last candle here is what we are going to consider as our demand zone, right? Look at what price did afterwards. Price moved impulsively, leaving imbalances behind. So we're just going to pick this zone as well. We're going to pick this candle as our demand zone. and this is going to be our second trade, right? Now, because we are bullish, because we are buying, that's why we are considering all of these demand zones, all of these value demand zones. We're going to then still target this high as our take profit, right? And so we now have a new break of structure. We now have a new break of structure, right? So we then identify the demand zone that was responsible. This was the last valid demand zone that was responsible, that broke this structure, right? But then we don't expect price to always visit this zone, else it's going to end up becoming a ranging market. Price will just keep moving this way, right? And once price start acting like that, price is going to start hunting stop losses, right? So what we're going to do, so we'll mark out this zone. We don't expect price to always come here, right? So we'll just be following the market, and then we'll be marking up the change of character, or sorry, the break of structure that happened, right? Now this is a new change of structure that happened. Also, this is the last demand. This is also a demand zone. If you agree with me, this is the demand zone as well, right? Because after price took out this high, price retraced and then give us this demand zone, right? So you can also consider this zone here as our demand zone. Then we're just going to use the body of the candle, right, as our entry. And that would have, given us a trade already, right? But if you don't understand what I'm saying here, you can just pass, right? The next one, you're going to understand it. The next example, right? We just place this here and just target this. Now, also, we have a new break of structure here as well. Let's look at, we have a new break of structure here. We have a new break of structure here, right? Now, which zone is responsible for this break of structure? Here goes our demand zone, right? So this is another trade again, another trade, right? Another trade. And also we have a new break of structure again, right? We have a new break of structure. We have a new break of structure again, right? We have a new BOS. Which zone is then responsible for this BOS? We have also a valid demand zone here that also left imbalance behind after breaking structure. This is another valid demand zone. All right, this is also a valid demand zone as well. This zone also is valid. This demand zone is also valid, right? But remember, we don't expect price to always come back to these zones, right? That's why we just keep marking the valid demand zone. Whenever we see valid demand zone, we take the risk with it, right? We risk it. So this, because we believe because we know where the market is trending already, right? And we know that this is a very volatile pair, right? So you can see how we just keep getting lots of trades, right? How many trades have we caught now? This is 1, 2, 3, 4, 5. We've caught 5 trades already. So you can see how wonderful this strategy works, right? You can see how this strategy works. And it just keeps going, right? If you look at this zone, we have a break of structure here. We have a break of structure here, right? Although there's no imbalance here, so you're not going to consider it. There is no imbalance, so it's not a valid demand zone, right? So guys, you can see now this is 1 ratio, this is almost 1 ratio 3, this is almost 1 ratio 7, right? That's almost like 1 ratio 10 already, plus this one here, 1 ratio 4, plus this one, almost 1 ratio 4, plus this one, about 1 ratio 8. Guys, if you sum up all of these things together, we already have more than 1 ratio 20 RR already, right? So this means you would with $100, right? If you actually risk $100, you would have made more than $1,000 as your profit already. So you can imagine that if you actually started this first trade with $100, right? You would have actually, and then this trade with $100, right? All of this profit, you would have made more than $1,000, right? So guys, this is how this strategy works. And now there are also conditions for this strategy, right? You don't want to trade this strategy on a pair that's not volatile. This strategy works for this pair. If I go to another pair right now, this is US30, and I do let me just clean all of this markup, and I do my top-down analysis again from the daily time frame, right? From the daily time frame, I'm going to have the same result, right? Once you understand market structure, you don't have a problem, right? You just have to understand market structure, right? So you can see what is happening here as well. This is price. This is a sweep of liquidity we have right here, sweep of liquidity, and this is a break of structure. If you agree with me, or a change of character. Sorry, a change of character. And then this is our demand zone, right? These are demand zone. What are the demand zone that broke this structure? Then you go to our 1 minute time frame again and see how price reacted from this zone you're going to end up catching lots of trades again, right? The most important thing is for you to identify your key zones, right? You need to identify your key zone on the daily time frame, right? So you can see what price is doing here as well, right? We would have caught trades here as well. We would have caught trades here. So it works everywhere. But guys, ensure you're actually trading a volatile pair. I just saw one trade now. I just saw a beautiful trade now. So you can imagine that because this demand zone is valid, left imbalance behind. So you can, guys, this is how you just keep catching trades. This works on all pairs that are volatile. Ensure you don't try this strategy on a pair that's not volatile. Else, it's going to give you a wider spread. It's going to give you low opportunities, right? And it's going to give you slow price action, right? So guys, if you like videos like this, click on the subscribe button and always turn on the notification so you always get notified whenever I have a new knowledge for you guys, right? So I'll leave a quiz in the comment section just to test your understanding of this concept to discuss. Guys, I don't want this video to be so long, right? So I'm just going to end it here. See you in the next one.